Hello everyone. Today I would like to talk to you about a grant program that's available for first and second time home buyers that makes it easy to get into a house because you have to put very little, if any, of your own money down, hence the title of this video, How to Get Into a House for Free. Now, you still do have to pay for the house over the lifetime of the loan, but your down payment can be zero or close to it, which makes it possible for nearly anyone to get into a home. There are some caveats to this program, so today I'm going to go through what those caveats are. They're not that hard to qualify for, so a lot of people will be eligible for this program, and I'm going to get into what the cash outlay will look like compared to a normal home buying process, and basically get to the fact that you should be taking advantage of this program if you have the opportunity to. I wish I could have when I bought my first or my second house, but although it's too late for me, it's not too late for you, and let me get into what allows you to qualify for this program. So why am I so excited about this program? Well, the program allows lenders to give you the opportunity to have up to $7,500 of your closing costs paid by the lender. Not rolled into the loan, not anything else, just lender paid. In addition to that, they can also provide up to $10,000 of your down payment, anywhere 3% or less of the total loan. So what all that mumbo jumbo means is that's almost $17,500 of eligibility that you could potentially get in savings, which will eliminate most of your closing costs, if not all, and eliminate most of your down payment, if not all of it. So with that, that's how you end up coming to the closing table with $0 and ending up having more money in your pocket at the end of the day. It also just makes the ability to buy versus rent that much smoother, right? So when you go to rent, you have to put first, last, and security deposit. Well, in this case, if you're putting between zero and maybe, let's say, worst case, $3,000 to get into a house, you're all in for $3,000. And then your first mortgage payment might not be for another 45 days after you get into the house. Mortgages tend to be less than rent on average for the same home. So let's say worst case, $3,000 and then no mortgage payment for 45 days. When you go into renting an apartment, first, last, security, I almost guarantee that's going to be higher than the $3,000 outlay for the same house that you're trying to rent. And then you pay rent the very next month. Whereas your rent payment will be higher than the mortgage payment. So you're paying more to get in the house to rent. You're paying more each month to stay in that house. Whereas if you just take advantage of this home buying program, you're going to be able to get in cheaper, start to own the home, and pay less every month. It's literally a win on every angle of the transaction. So I highly encourage you to check out this program. I'm going to put some lending contact info in the description link, and we can go from there. Now, how do you qualify for this program? Well, only certain areas meet the program's needs, and the lenders will have to work in these areas in order to give you the grant. Not that the lenders have to be there, but your home has to be there for you to purchase. So certain areas, it's a lot of the hot neighborhoods in Philly fall within these areas. They tend to be lower income areas that can be on the up and coming. So that helps with being able to find the property in the area and still qualify. I think it's pretty easy to do that. The next thing is your income has to be at a certain level. You can't be making 200, 300, 400,000 and be taking advantage of this government grant. There is an income cap. I do have to check and see where it was at, but last time I looked in, I believe it was around 80 to 85,000 is where they cut you off, but it depends. We'll see where the program has it now. So if you're under that threshold, you should be fine. So location, you're likely to be able to find something in Philly. Income threshold, I would think that most people are going to qualify and be under that threshold. So those two things are great. And then the last thing is you need to be shopping with an FHA, conventional, or VA loan type, which almost every first-time home buyer is going to end up falling into these categories. I always tend to recommend conventional over FHA. I can get into that more later. But for now, let's just stick to the basics: location, income level, and loan type. And you're likely gonna qualify for all three if you're shopping somewhere in Philadelphia. So you'll likely qualify for the program, have to put less money down than if you were buying the house, or renting the house rather, sorry, and you'll be able to buy and become a homeowner. So definitely encourage you to check out this program. If you see any houses you think may fall into this category, then send them over to me. I can help you figure out with the lender if they qualify for this program, and let's get you into your first house and start you on your road to financial freedom. Now, normally it takes about 3 to 5% of a down payment on a house, and then you're also going to be paying closing costs on top of that, which can range from anywhere between another maybe 3-4%. And with all that being said, it can cost a little bit to get into a home, a little more than maybe you have saved up, or maybe you've been working to save up to get into a house, and that hurdle is stopping you. Well, this program will mystify any of those requirements, and you'll now have the opportunity to get in without having to pile up that 6 to 9% of the home value in order to get in. So that'll help you out. And I forgot to mention earlier, one of the beauties of this program is there's no PMI, no private mortgage insurance, which a lot of times when you put less than 20% down on your home, you're gonna get charged private mortgage insurance every month, sometimes until the end of the loan. If you go FHA, if you go conventional, until you have at least 20 to 22% equity in your home. So not having PMI from the very beginning with this program will save you hundreds of dollars versus if you were to go in traditionally. And with that, it seems like you get to go less money down, your mortgage payment can be lower. It just an all around win to take advantage of this program, and I highly encourage it. Thank you guys for tuning in today. I appreciate you checking it out, and I hope that you're watching this video because you're interested in getting into your first home, or maybe you're ready to buy a second. Send me some houses and I'll try to help you figure out if they're in the right area, and we can see if you qualify for this program, and let's get you into your first or second house with as little money as possible and start you on your path to financial freedom.